Alright, just like the title says, we're going to be talking about IPOs of companies that have gone public, about to go public, or plan to go public in the future. And this video isn't a deep dive into any of the companies I'm going to mention. Just think of it as a jumping board to start your own research to find your next, 5x, 10x, 20x, 50x, 100x, 1000x, or even your 10,000x stock. Starting off, we have 23andMe, where you send them your saliva and white people can find out whether their ancestors were slave owners or not. But mostly they just tell you how likely you are to experience hair loss or more serious diseases, but it's currently trading down 25.75% since its IPO. And you're probably seeing there it's just a quarter commercial, and while I've never used their investing app personally, Acorns is going public via a SPAC merger later this year, with an estimated value of $2.2 billion. I'll be sticking with M1 Finance, and you should be as well, because they are running a special promotion where if you use my link in the description, they'll give you $50 totally free when you open and fund your free account. And with that shameless plug out the way, let's move on to the next company. We have Affirm that IPO'd back in January, a fintech company that does the whole buy now, pay later spiel. But the stock's not doing so well, and it doesn't help that Apple is going to be teaming up with Goldman Sachs to come after their lunch. Rora, the self-driving company that all the cool kids are talking about, they'll go public later this year. They have partnerships already with Toyota and Volvo, with a really close tie with Uber, having bought out their self-driving division last December. While I don't plan on buying any Aurora stock, I do own Uber, so I'll definitely benefit indirectly because Uber does have a 26% stake in Aurora. Another self-driving company, Embark, is led by a 25-year-old CEO. They'll also be going public. And I think the whole reason they are going public is because Alex read the CNBC article talking about Luminar and how its 25-year-old CEO became one of the world's youngest billionaire, and he just got jealous. But that's just me. Authentics brand, the parent company of Aeropostale, Forever 21, Juicy Couture, and Sports Illustrated, they filed for their IPO this month, and they really seem hopeful that the retail apocalypse isn't going to take them out. Same goes with Torrid Holdings, another retail chain that offers plus-size clothing that went public this month, but personally, I just stay far away from retail brands unless it's either Nike or Lululemon or TJ Maxx. BarkBox, a monthly subscription for dog owners, must have seen Chewy's stock chart recently and went, damn, I want in on some of the action, because they also went public last June, and I have to say, their ticker symbol, BARK, is pretty adorable. And if Costco was just an online business, it'll probably be something like Box.com, an online wholesale retailer where you can buy a 4-pack of these Old Spice high-endurance deodorants. And unlike Costco, you won't get charged a monthly fee, which is nice. And so it plans a merger with a SPAC later. Next, we have Bullish, which is a crypto brokerage that's so new it doesn't even have a website yet. They also plan to go public before releasing their crypto exchange platform. So basically, you're only investing in it because it's backed by Peter Thiel, who is a Roth IRA billionaire I did a video on. And I guess if people are willing to buy Logan Paul's scam coin, why not bet on a billionaire instead? But sticking with crypto, we have Circle, who co-created the US dollar-backed stablecoin USD coin. They're also going public. And meanwhile, Congress is still deciding how to deal with all these crypto brokerages and cryptocurrencies coming up. So it'll be interesting to keep an eye out on these two new crypto stocks to see how they perform. And while I personally don't own any crypto anymore, which I explained in this video, I do own shares in Coinbase that IPO'd back in April and had lots of finance channels like Financial Education, Meet Kevin, and Andrew Jick saying it'll never go below $400. Well, surprise, surprise, it's been hovering around $250 the past few months, which is basically where my current cost basis is. So while I'm planning to hold this one long term, it's definitely one of the more riskier stock holdings that I have. And also, remember BuzzFeed? Me either, but they're planning to go public, targeting a $1.5 billion valuation. So I guess we'll soon see articles like this one, 36 stocks our readers are loving in 2021, very, very soon, and I personally can't wait to read them. If you happen to love Greek yogurt, you're in luck because Chobani has filed for an IPO. No word yet on how many shares they'll be selling or the price range, but the initial valuation is set to exceed $10 billion. And if you watched my videos before, you know this was coming. Coupang, the so-called Amazon of Korea, had its IPO back in March. And if you want to know what I think about Coupang, just check out these 4 videos I already done. But currently the stock is down 21.42% since its IPO. And next, I remember signing up to Coursera years ago, and I still get random spam emails telling them all the classes they have and I haven't finished. So I was a bit surprised to see them go public, but hey, they have over 4,000 courses with more than 150 universities partnered, so maybe this is the future of education. Chinese ride-sharing giant Didi, they went public last month, and they're already facing lawsuits because the Chinese regulators basically told them to delay their IPO for cybersecurity reviews, but they said, nah, we're just gonna do what we want. I mean, when are people gonna learn? When the Chinese government asks you to do something, they're not asking you. They're basically telling you to get in line. And sticking with Chinese IPOs, try not to laugh at this one, but we have Ding Dong, a Chinese grocery delivery company that went public in June. And Ding Dong wasn't the only grocery delivery company that went public, because we also have Miss Fresh, another Chinese company that's not doing so hot. Currently down 18.32% since its IPO price. And hopefully we'll have better luck domestically, because we have news that Instacart, the savior for people low on toilet paper during the pandemic, is considering a direct listing as opposed to a traditional IPO. Nothing's confirmed yet, but if they do go public, I'm sure we'll see tons of video about them on YouTube. But if you'd rather be buying your groceries in person, you're in luck, because the Fresh Market, which is a North Carolina-based specialty gourmet supermarket chain, has filed for an IPO. So whether you prefer online or in-person shopping, the IPO market got you covered. And another mega IPO that's expected to come soon is that of Discord, the popular chat software maker that all finance YouTubers seems to be telling you to join because how awesome their communities are. And don't worry, I don't have a Discord server to sell you on and to tell you to join, but if I did, I'd probably call it a Shinhead server, to pay homage to the boggleheads. Now, before the whole pandemic started, my family did have a very nice vacay to Disney World in Florida, and I got to taste their famous Dole Whip. And it was pretty good, but probably not good enough to make me invest in the pineapple giant Dole when the IPO sometime in the near future. Now, I didn't know this, but did you know that there's a social media for doctors? Because that's basically what Doximity is, having almost 1 million members, or 70% of all US physicians. I mean, screw Facebook with everyone pretending to be a medical expert. Invest in Doximity right now, because that's where the real doctors are at. And similar to Coursera, Duolingo is another one of those apps we download to better ourselves but never actually use, but we feel bad so we don't actually end up deleting it. Well, I guess this language learning app has tons of users because their revenue doubled year over year, and maybe I'll buy a few shares and forget I even bought them, so we'll see. Now, if you were sad when Dunkin' got bought out, you're in luck, because the Dutch Bros Coffee has filed documents for their IPO, and while I've never been to one, they do call their baristas broistas, so I'm guessing they're pretty young and hip with a chill vibe. But you know what goes with coffee? Donuts. And you can get in on that action by investing in Krispy Kreme. Stock is down almost 19% since its IPO, which sucks, but they're giving out free donuts if you're vaccinated, so hopefully that makes you feel a little bit better. But in case you gained some weight throughout the pandemic after eating all these free donuts, don't worry, because we have 2 fitness companies going public. First, we have Equinox Group, parent company of SoulCycle and Blink Fitness, in talks to go public via SPAC, while F45 Training, which is one of the fastest growing fitness franchises globally, they recently went public. And between the two, I'd probably buy F45 because it's backed by Mark Wahlberg. Yep, the Mark Wahlberg who loves Bud Light. But honestly, it doesn't really matter which fitness stock you buy, because whichever you choose, you're gonna need to make sure you look good in the gym. Thankfully, we have Kate Hudson to the rescue, because her workout clothing brand, Fabletics, is going public. And pop quiz, which of these two is the Fabletics Instagram page? It's actually this one. But what this shows is that colors are no longer limited to just workout clothes, because the clothes that you see here is actually hospital scrubs that comes in all kinds of colors and styles thanks to Figs, a healthcare apparel brand. And no, I'm not even joking, so make sure to buy some Fig stocks now before they announce a partnership with Supreme or something like that. But now that you're investing in fitness and a leisure company, maybe you're also interested in healthier eating. If so, go ahead and buy some Sweet Green stocks when they go public in the coming months. But with all that said, honestly, their $12 salads are probably not my style, but it does explain how they're making so much money. Now, speaking of companies that I already own, I do have some Beyond Meat shares over here, which means the perfect companion company to own will be Weber Grill when they IPO. The pandemic definitely helped this outdoor grills maker out, increasing their revenue 62% year over year. But if Weber Grills is too primitive for you for some reason, you can invest in Traeger Grill when they go public instead. Because get this, their Timberline grill line can be controlled and monitored by your smartphone. I'm not even joking, just download their Traeger app and use their Wi-Fi technology to monitor your cooks, adjust grill temperature, and access over 1,600 recipes. And I guess a smart outdoor grill is more useful than a smart toaster, but I think I need to contemplate my life a bit after this one. But I think the companies I mentioned so far, they should be enough to keep you guys busy on your own research. So let me know down below which companies surprised you the most with their IPO news. And as always, a like and subscribe is always appreciated. But whatever you do, make sure to become $50 richer by using my referral link below. But with all that said, I'll catch you next time with more upcoming IPO news or, whatever financial shenanigans I have in mind.